So we've heard from the Bureau of Statistics about the GDP numbers and where the sticky points are. And of course, we also heard from the Central Bank of Nigeria on Tuesday, two very important economic and market-sensitive, indicative reports, as it were. So if you look at inflation that came in for April and the PMI for April as well, if you go back, if we backtrack April to where we are, we've seen a bunch of economic data. So let's put this together. How do power, petrol, and everything feed into the first quarter GDP, the second quarter, the budget 2017 that is on paper and soon to be effective, and of course the full year economic outlook? Eronmosele Aziba is one of the investment analysts from Afrinvest and is live here in the studio with us to put some power into the conversation. Good morning.
Good morning, boss.
It's good to have you.
Thank you.
If you look at all the set of data we've seen so far, the PMI, the April inflation, the first quarter GDP, it looks like energy. It's a recurring decimal in all these reports, isn't it?
Yes. So what we've seen is, yes, like you mentioned, energy still remains a concern, but even looking at GDP reports released yesterday, we saw that in terms of oil production volumes, we actually saw that improve in Q1 2017. It settled at about 1.83 million barrels compared to 1.7 that we had in the fourth quarter of 2016. Although the 1.83 from the GDP report released yesterday, we've seen that it was stated that the 1.83 is still subject for revision because of the numbers from March. We know that we've seen a lot of improvements. We had a lot of oil disruptions to oil installations in the Niger Delta. We've seen some peace return to that sector, and we've seen oil production improve. So generally, we should see an improvement in performance from that space. Then if you also consider the fact that the OPEC will be having their meeting tomorrow, talking about extending the production cuts, which will also be beneficial for Nigeria. I mean, over the last week, we've seen oil prices appreciate, and that's a positive for the economy.
But in terms of powering the GDP moving forward, yes, the non-oil sector came out of recession, as it were, in the Q1 GDP that we saw yesterday. The oil sector remained slightly underwater on a year-on-year basis. That was much deeper. But the non-oil sector was recovering. And if we're going to power the key sectors that drove the non-oil out of recession in Q1, which is ICT, manufacturing, agriculture, and trade. Even for trade, you need electricity for your warehouses and some storage, isn't it?
Yes, that's also key. So yes, the power sector also plays a key role. But in terms of looking at the industrial sector, for most of the big players that you have there, they aren't necessarily reliant on power that is generated within the country. Most of them run generators on their power plants because they can't afford to have their plants shut down for any reason. So it's mostly just like their administrative offices and all. But looking at for smaller players in the industrial, in those sectors, it would actually be beneficial for them if we can address some of these power issues that we are currently having. I mean, when you see aggregate transmission